Alright, for this video I want to go over a sample form PA-40, which is a Pennsylvania income tax return. And for this scenario we're going to look at a non-resident Pennsylvania return. So our taxpayer here, Jacob taxpayer, is a full-time resident of Florida, but he has a Pennsylvania rental property which requires him to file the PA-40 on a non-resident basis. So we'll go through the full PA-40 here. We've also got Jacob's Form 1040 as well, so we'll cover these details also. And then lastly, I do have a slide here covering just the background on the fact pattern that we're going to be working with, and then some Pennsylvania tax notes that would be applicable if you're filing a non-resident return. So if we start with the fact pattern here, we've got Jacob Q taxpayer. He's a single filer and a full-time resident of Sarasota. He works full-time as a consultant and earns a W-2 wage of $89,500 for the 2022 tax year. Now he has some investment income here, so he has a U.S. bank account, earned some interest, earned some dividend income in his brokerage account, had some capital gain distributions as well, and then he's got some municipal bond interest income of $85. Now, the rental property in Pennsylvania that creates this filing is as follows. So he purchased a single-family home in PA and he rented it to a tenant. He bought the property for $650 and he did some upgrades, carpets, appliances, other items for $32,000. The property was placed into service and rented on April 1st. Now these upgrades, the $32,000, because these are characterized as personal property, and their eligible useful life is under 15 years, he gets the federal bonus depreciation. So that is available on the improvements. However, he decided to elect out of the bonus depreciation and just use the maker's rules because Pennsylvania does not follow these federal bonus depreciation rules. Now, you can still use the bonus depreciation, but then you would have a state to federal difference. So instead of doing that and just making things easier, he said, well, I'll elect out, I'll use makers for both purposes. So makers for both federal and state income tax purposes. And he does not actively participate in managing the rental property. He has a management company that does absolutely everything. So he's not going to be claiming that $25,000 passive activity loss allowance, which is available for certain taxpayers that do actively participate in the rental property. All right, now, so in Pennsylvania tax notes here, who needs to file this? So if you're a non-resident and you have gross income in excess of $33 during that, this is at least the 2022 tax year, you have to file. Or if you're non-resident and you had losses on PA source transactions, so either as an individual or you were a partner or a shareholder in a partnership or S corporation, you might have to file. Now, the income tax is taxed at a flat rate, so there is no discounted rates for things like qualified dividends or long-term capital gains, which is different from federal taxes, right? We have different rates for different things. Now, again, the Pennsylvania doesn't follow the federal bonus depreciation, but they do follow ACRS, makers, and in some cases you can take 179 expenses. Now, just a few other points to highlight because they're relevant for this return. When you have a rental property, your rental income might be subject to a sales and use type of tax, this hotel occupancy tax, if you have short-term rentals. Right now, if you have long-term rentals, which is the case here for Jacob, it doesn't apply. But something to keep in mind if you do have like an Airbnb and you're doing short-term rentals in Pennsylvania. Now, also, what's a big difference is here between federal and PA. Pennsylvania doesn't have passive activity loss rules, right? So at the federal level, we have to do the 85-82. We have passive activity loss limitations. Pennsylvania doesn't have those. And then also, if you have net losses, those are recorded in the current year, but if you have overall net losses that can't be used, they are not rolled forward to future years. So that's also a big difference with the federal return is when we have passive activity loss carryover losses in the current year, we carry those over to future tax years. They can offset future positive passive activity gains, and then we also have potential for NOLs. So the rental losses that we're going to have in Pennsylvania this year just basically are recorded in the current year, and then they kind of disappear. All right, so let's have a look at the 1040 first, just to highlight a few things, and then we'll move on to the state return. So we've got Jacob's wages here, his investment income. Now, because he's a non-resident, none of the wages nor any of the investment income is going to be subject to tax in Pennsylvania because it's not Pennsylvania source and he's not a resident there. Now, you notice here, if we jump to the Schedule E, this is where we've recorded the income and expense for the rental property in Pennsylvania. Right, we got the rents received, various expenses here, and then the depreciation is just the makers. So the straight line depreciation on the residential property itself, and then makers on those improvements. And so the overall net loss is $2,518. But because this is a passive activity, we do our 8582 to record the net passive activity loss for the year, and so that's suspended. Right, so if we look at the Schedule 1. We can see here in Part 1 that line 5 for rental real estate, it's a 0, right? So we're not passing through the loss this year because we have overall net passive activity loss, and so that's just going to be suspended, carried forward to the future tax year, right? And so that's what we can see here in Part 7 on the 8582, the allocation of unallowed losses and allowed losses. We've got the unallowed losses being rolled forward to next year. All right, so if we have a look at the Pennsylvania return, pretty straightforward in the top part here, right? Just identifying information on the taxpayer. So we got taxpayer social security number here, last name, first name, occupation. On the right-hand side here, we are indicating it's a PA-40 filed by a non-resident. So the PA-40 is filed for all three types of categories. They don't have separate forms for resident, non-resident part year. So we've got a non-resident taxpayer here, single filing taxpayer, and then no's applied to these next four questions. Now the address, phone number here for Jacob, and then this 5-digit code is the school district code. It's all nines if you're non-resident, and so we can leave the school district name blank. All right, so let's start with page 1 here. So you can see here the amounts of compensation, interest income, dividend income. All of these are 0 because Jacob is a non-resident, right? So none of his compensation is PA source, nor is it attributed to Pennsylvania because he perhaps lived there for part of the year. And the same thing with his investment income. The only thing we can see here being recorded is the net loss from the rental property, right? So Pennsylvania requires you to complete its own version of the PA Schedule E, so you can't use the Schedule E from the federal return. So we've got the PA Schedule E here, the name of the taxpayer, social security number, the sales tax license number. So sometimes taxpayers will register for this even though it's not required, and that's fine. So Jacob was registered kind of in case he decided to go down that short-term rental route, but in his case, he has a sales tax license number, but he doesn't actually owe any hotel occupancy tax because he's got long-term rentals. A yes or no question here on how are the rental payments processed. So he has the payments sent to a third party, right, the management company, and then they forward the rents on to Jacob. So he's checked yes there. So fill out information on the property description, and then the income and expenses mirror what we see on the Schedule E for the federal return, right? So again, makers is allowed for Pennsylvania tax purposes. Bonus depreciation is not, so that's why he elected out. So the property here, the property is located in PA. Answer no, the property is not rented for periods less than 30 days, right? So he doesn't have this short-term rental problem. And so we can see here the net loss is going to be $2,518, and that is what is flowing up to page 1 of the PA-40 on line 6. So minus 2518. And then again, remember that as we highlighted on the slides, none of those losses carry forward. There's no passive activity schedule that you need to do for Pennsylvania purposes. The losses are just recorded as is, and then they kind of disappear. And so one question I often get is, well, can these be applied against other income? And And the short answer is no, right? So if you look closely here, it just says so even on the form, right? We're looking at total PA taxable income, add only the positive income amounts from these line items, don't add any losses. So even if you did have, let's say, positive amounts of compensation, investment income, you would be ignoring the net loss from the rents, and then your adjusted PA taxable income would be a positive amount. Last thing to include, and this is a PA W-2 reconciliation worksheet. So a lot of taxpayers get a letter saying that they should have been completing this, and so we go ahead and include it anyway, even though you're a non-resident. So this W-2 reconciliation is required when your Medicare wages on your W-2, so your Box 5 wages, differ from the Pennsylvania wages reported on your W-2. In Jacob's cases here, his Pennsylvania wages is 0, so he's definitely got a variance there. And so we complete the W-2 reconciliation to show that, okay, these were the amounts reported for federal wages in boxes 1 and 5. And then the reason for the variance is we have this subtraction here where he's filing, it's a non-resident return and non-resident pay. And so that's why his Pennsylvania wages on his W-2 are 0, because they're not Pennsylvania source wages, nor is he a resident of Pennsylvania. So that's the last thing to include there, just to make sure you don't get a notice from Pennsylvania about why your W-2 federal wages differ from the Pennsylvania reported amounts. All right, so that covers it for this return. Hope that was helpful. If you have any questions, please leave a comment below, and I look forward to seeing you again on the next one. Thanks.